let's just start by looking at the Nigerian stock market since the 2008-2009 crisis. Has it recovered much? Has investors' confidence been renewed in the market from then till now?
Yeah, I think there's been a lot of recovery that's happened. We are not yet at where we were then, but I think we are on the road to it. The market cap is currently about 37, slightly above 37. So I think before the end of the year, we could achieve 40,000 and gradually move back to where it was before the crisis.
Well, that's what we're actually hoping will happen, as in the start of seeming recovery towards getting to that $1 trillion mark that the NSE and the Securities and Exchange Commission want. But then, is it really realistic? Femi, I'm going to ask you because you actually scoffed at that.
Well, to start with, I personally believe that it's high time we stop looking at 2008 figures anymore. We should just draw a line and then say, let us pick the recovery period and start on a clean slate.
Okay.
If you take a look at that, market cap generally has increased by about 75% from April 4, 2011, when the Oscar-led management joined it. Now, if the projections for a $1 trillion by 2016, one needs to understand the context in which it was set. If we want to be a world-class economy, then that means we must benchmark with world-class markets as well. The ironic thing about it is that the arguments currently going on about whether it is realistic or not is much more beyond the capital market. There are a few indices that makes that a very valid case. If you're going to have a $1 trillion market, you must perhaps have at least something close to a $1 trillion economy. I was talking with a few analysts, and I mentioned that we currently have about 238 billion economy, and by the time we do rebasing, we probably come to about 380, which is a far cry. The arguments have been made that to date there are about 12 stock markets with a 1 trillion size in the whole world. And of all these 12 markets, US, UK, Canada, China,
Hong Kong, Switzerland,
there are only 2 of them who do not have a $1 trillion
dollar mark
economy.
Okay.
Switzerland and Hong Kong. And I read something from Morgan Capital that said Hong Kong is positioned itself to be a listing avenue because it doesn't have a huge economy. So the challenge is to look inwards and say to ourselves, do I personally believe we can? My proposition is as follows. 1, it will take a quantum leap for us to create that kind of economic position in 3 years to 2016 to be able to achieve that. Second, given that it is imperative that we create a nexus between the economy and the market in terms of capital mobilization distribution, in terms of wealth distribution, in terms of creating the engine room, I think the target by the NSE is a stretch goal which they hope to achieve. And I think it's the right direction.
It's a stretch goal. Is it that they're not putting in the right policies?
It's beyond them. It's beyond them, entirely beyond them.
When you talk about the market capitalization of an economy, of a capital market within the capital market within the economy, it doesn't just mean the Nigerian economy itself. It also means other countries that want to come and list in your country, which is what Switzerland and Hong Kong have done. So, but the question is, what will make a company that is operating in Ghana wants to come to the Nigerian capital market to list, right? Why would someone that is based in South Africa want to do a dual listing both in Joburg and Nigerian economy?
Can I ask a quick question? For most of these companies who go to list in other countries, especially if they are domiciled there, like these telecom companies that we're talking about, were they coerced, for instance? Was there any law making them to do that, or were the policies or the regulations proper right for them to do these listings?
I think for the purposes of avoiding any contradiction, The initial premise I gave was the fact as it is. You cannot create things out of thin air. The reality, however, is that, like I said, it's a stretch goal. Those individuals and those entities you mentioned operate through a body of incentives, not coercion. Well, sometimes with a little bit of a stick behind the incentives. You take the example of South Africa, you take the example of, most especially the example of Nairobi Stock Exchange, Kenya. A single listing of Safricom changed the whole dynamics. But Kenya did not just get Safricom to list by saying, "We are a telecoms company, we need you." They made a conscious effort to release capital market policies and fiscal policies that were based on tax incentives that went on into things like abolishing stamp duties, dividends for all their investments in a particular year.
Even
transaction costs. And they also went ahead and also supported things like venture capitalists, those who encourage them. So it became attractive to go list your company in there. Now the question is this. Our position is that if you look at the Nigerian cap, I think it's about, for the sake of argument, I think we have about
74 billion.
75 billion, which is about 7% into the 1 trillion. Of this 74 billion, Dangote alone is about 22 billion, which is about 2% of that 1 trillion. Now, if you look at Dangote Cement coming in, are there similar type companies in Nigeria? Yes, there are. In which areas are they? Telecoms, power sector,
oil and gas
and JVs, extractive minerals, you got agriculture, technology and ICT. You even have in areas such as waste management, a serious level aviation. Now, the whole idea is that it is not just a capital market argument. It is an economic argument. That if we're talking about rebasing and whatever, the whole idea is to find a body of incentives and policies, fiscal policies and capital market incentives that encourage these sectors to actually find it convenient for them to list. But if you turn around and say to yourself, we also have sovereign bonds that was listed in the London Stock Exchange. We don't list here ourselves. We have our sovereign wealth fund, which can come in. We have about 3 trillion in the pensions funds.
What about the ETFs?
But the ETFs, according to the NSE, may even take some time. They've listed one, right, then the gold, and then they intended to list 5 by a few years time, maybe a little bit challenged because of the requirements.
Well, but that's just it. So why don't they ease on the requirements to make it more easy for these companies to come in?
No, it's not an NSE problem at all. The whole economy, we all need to work hand in hand together and know that the major players within any economy, in the capital market, the financial market, we all need to work together.